Traders, because of Vinny coming to you from theclosingprint.com on June the 9th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher by more than 4%, with the exception of small caps, IWM, despite the mixed performance with the big cap tech stocks and FANG group. The bond stock ratio shifted to short-term bullish, long-term neutral. Junk and high-yield corporate debt are still bullish. Dow Composite bounced. It is bullish. It's currently at resistance pivots overhead, and the S&P 1500 is on a buy signal. Sentiment is bullish. NAMO and NIMO are starting cycles up. Breadth thrust reversed on Tuesday, and on Friday approached extremes. In addition, the S&P 500 is bullish with A50R moving from 29.6 last week to 54.71, well below exhaustion levels. We had the NYHL with a bullish spike we haven't seen since January of 2018. The high-low percent is bullish, and the number of stocks advancing versus declining, NYAD, is also bullish and rising. U.S. dollars at 96.49 is making lower highs and lower lows, with RSI dropping, indicating we could see more downside in the greenback. The yen is neutral. It had popped to highs not seen in over 6 months. That affected the Nikkei. Last week it moved sideways. The Nikkei responded by moving up 1.38%. The British pound US dollar continues its fade. That's bullish for the FTSE and the equities trading on the London Stock Exchange. Bonds continue to show risk aversion, yields moving lower, and bonds have continued moving higher. TLT is at resistance. It did show some signs of selling last week. Again, we'll listen for any indication that funds are rebalancing, selling bonds, and buying equities. I don't think that's going to happen just yet, given the current situation. Gold is bullish. It did break out over 8 days ago, and it is at resistance. Look for that to fade a little bit for a better entry if you're interested in gold. Copper is bearish, so if it moves lower, that wouldn't be a good indication for the economy in the short term. West Texas crude, we saw a hammer last week. That's neutral for equities, but if it does start to rise again, crude would be bullish for equities. Most sectors are improving with exceptional strength in materials. The international markets also showed a lot of improvement with Australia, Brazil, Greece, Turkey, India, and Russia improving. It's Russia that we're watching. That could turn and set up a nice long over the next few weeks. We'll look at some IBD 50 names that showed relative strength and moving higher through the mean, looking for ATR1. A lot of stocks are extended and might pull back. I would not chase anything that is above recent pivots or breakout levels. Market Smith Growth 250 and the relative strength Blue Dot Scan also had a few names to watch as well. In addition, Bukowski had 4 of 5 red with a CPI signal green since June the 7th. Last week we had a 0% reading that was extreme low, indicating we would most likely see a reversal. We got that on Tuesday. It closed at 65% and bullish with 32 bearish patterns, 60 bullish patterns, and 102 patterns waiting for a breakout. Bottom line, the markets reversed. Last week, we saw the president mention Mexico after the close on Friday, that a deal had been reached. We'll see if that follows through into Monday. It would most likely be an opportunity to sell into strength. All stocks that are extended beyond recent pivots and breakout levels, look for those to pull back in. We did that with a few names last week. Spiders reversed last week, giving us a great performance, more than 4%, after a run from the December lows up to the pivot highs, 26% gain. In the interim, the markets decided to give 7% back. We've now bounced at the 382 Fibonacci. RSI is back above 50 and rising rapidly. Almost a bullish engulfing candle last week on above average volume. MACD showing the bulls most likely will regain control. With market makers selling out of the money options, they had to cover last week due to the strength in the markets. That left us with a potential for a move back up to the highs, as the momentum in TTM clearly indicates, like we had back here in early January and again in November on these pushes higher back up to the second standard deviation ATR bands. So if we do make that upper band and price action is contained within one standard deviation as indicated on the weekly options, we could see 292 to 293 before Friday options expiration, just shy of recent highs. The NASDAQ 100 also bounced at 382, RSI is above 50 and rising, with the volume increasing last week. The Qs also price in a $3.77 move in either direction. So that's 184, just shy of the upper ATR bands, 184.81. We also see the Qs in an upswing on the daily time frame. TTM continues to point higher at the present time. In addition, we have small caps IWM with an expected move of $3.14 as priced in by the weekly options. The monthlies have a price of $4.60 for its expected move. So we could see ATR 1s, potentially ATR 2s this week, though I think the ATR 2 is going to be a little bit harder to achieve. Here again we see TTM oscillating back in the opposite direction as we're trading near the mean on IWM for the week ahead. Small caps showing RSI about to pass through 50. Just need to see more volume. NYHL had a spike that was greater than what we saw back in 2018. Significant only that the number of new highs beating out the number of new lows in a significant quantity. We also have junk bonds and NYED both moving higher as well. That said, we do have the put-call ratio at extremes near the lows, showing that there's more calls being bought than puts. That usually leads to a reversal and a contrarian play in the short term. So that is a caveat for the week ahead, where in the past this indicated a pivot point for the indices. VIX is also faded, but it is above its 50-period moving average. Look for a change in direction and a confirmation from VIX. If VIX starts to fall and moves below the 50-period moving average, look for the indices to move higher. If we see a bounce, look for SPY and the S&P 500 to move lower. The caveat for the bears, of course, is that breadth is improving. The S&P 500, S&P mid-caps through the zero line last week on a reversal on Tuesday. The small caps and NASDAQ all approaching the 30% levels. That said, NIMO is at a cycle low and turning. That could lead to further upside. Doesn't mean that prices will go straight up. In previous cycle lows, we did have price action move higher, pull back a little bit, consolidate, and then follow through. So the cycle is up. That is a caveat for the bears. The same thing goes for the NAMO, for the NASDAQ, as we continue to cycle, change to a bullish sentiment in the short term. The bond stock ratio is short term bullish for equities. Long term, we see a flat 65-period moving average. That just means that we're neutral at the present time as the ratio on a daily basis moves above and below the signal line. Therefore, as we go into this second week of June trading, we are approaching resistance levels on TLT. We'll have to listen for funds rebalancing or anything that sounds like rebalancing, selling bonds and buying equities. If yields start to bounce, bonds will come back in. As we saw last week with high yield corporate and junk bonds, we had a nice bounce off the 20-period moving average with the same bounce in junk bonds. As investors chase yields, they'll go after junk bonds. That's bullish for equities and risk on, while all of our risk on indicators confirm the action we're seeing on the daily time frame with junk bonds as well. The Hinkin candles here rising rapidly, with all three IBB, IWM, and crude oil rising into the start of this week. That being risk on for the equity markets. US dollar is also creating a tailwind for equities as long as this continues to drop back towards the 200-period moving average just below. This fade is good for US equities that trade overseas and report in US dollars. It's also good for commodities like gold priced in US dollars. As the dollar dropped, it takes more dollars to buy the same amount of gold, so gold prices will move higher. Same goes for crude oil, though we do see gold at resistance. If we do break out above 1349, look for a follow-through. Use this as your measured move. 1270 up to 1350, about 80 points. With a similar idea with crude oil, priced in US dollars, though crude oil is news sensitive, of course. If the Saudis do cut back on production and exports of crude oil, we could see a move higher back towards that 66 level. We had a near hammer on last week's price action. If crude oil does move higher this week, that would be bullish for equities. Sectors saw a huge improvement from the previous week ending 5/31 into last week, June 7th. Read from left to right, we see a cycle from bullish to red, which is bearish. Materials performed the best, but most sectors improved in the short term as well. International markets look very strong, as we've previously discussed in the opening monologue, with Brazil, Greece, Turkey, France, emerging markets, India, Russia, all improving. In the week ahead, we could see follow-through. In particular, I would pay attention to emerging markets. As the emerging markets ETF indicates, we're right at the mean. Got some selling at 4160 last week. Looking for a follow-through. RSI is rising, whereas we see the Greek ETF, GREK, gapping up 2 weeks ago, following through. It's a bit extended at ATR2. Looking for this to pull back a little bit with RSI overbought for a better entry, maybe a pullback to breakout just above these levels. The Russia ETF is also at 52-week highs, a bit extended. While we see the same thing with Brazil, we did get a descending pattern breaking to the upside, more bullish now as we trade between ATR 1 and 2. We would look for a pullback for any trades in the short term in this ETF. All of this is happening, of course, when the sectors are improving, moving higher. Remember, XLK technology typically outperforms in the month of July. As we can see in this seasonality chart for the sector, July is the strongest month over the last 5 years. We'll look for that to continue. As the cycle bottomed 2 weeks ago, we saw that XLK had a potential for a reversal. We did see that Monday, tested the lows, followed through on Tuesday into Thursday and Friday, moving back above the 50-period moving average, 200-day, with the cycle full on bullish now. This might be a couple of weeks ahead of that July improvement that we typically see during the seasonality peak. So watch XLK this week. It'll probably outperform if this cycle perpetuates. We see similar cycles in the Dow Industrials, 30 stocks, the NASDAQ 100. US dollar is also in a bearish cycle. Gold miners are in a bullish cycle at extremes near resistance. Semiconductors are in a bullish cycle approaching zero line probably in the next week or two. The 50-day is overhead. TLT is at a cycle extreme near resistance, as we pointed out on the weekly time frame. The Wilshire 5000, broad measure of market participation, trading at the 50-period moving average. The cycle turned last week and bullish. Biotech's trying to turn higher, but clearly not accelerating to the downside. Materials had the strongest performance. Lots of volume last week, nearing resistance levels, cycle pushing through the zero line, a bit extended right now. I'd look for a pullback or a flag if you're not in it already. The communication sector with Disney, Netflix, Facebook being affected by the latter. Cycles trying to turn if it wasn't for Facebook's weakness. Energy beginning to turn near cycle lows. XLF improving, so those of you with banks like Ziggy and a few others continue to look for upside as we trade above the moving averages. Sector industrials improving, XLI trading at the 50-period moving average, cycle up, started last week, look for follow through. Even consumer staples breaking out with a bullish cycle. XLU saw some selling on Friday, a bearish engulfing candle indicating we could see downside from here. Healthcare improving, breaking above these levels. I believe Arthur Hill and John Murphy pointing these things out last week, looking for a breakout. We got that. Now we're seeing a follow through. Look for this cycle to continue, along with consumer discretionary trading just below its 50-period moving average. Bottom line, all the sectors have improved, have potential for a little bit of a flag or consolidation of the recent 5-day move, bullish pattern before resuming higher levels, as you can see with the cycles turning bullish in the short term. And of course, retail, which CNBC and all the financial media have been talking about. The weakness in this sector formed a bottom last week. Turning, look for a follow through. You might have your best setups in retail going forward. Here are the IBD 50 stocks. We like candidates that are trading above the 20 and 50-day moving averages with both rising. We don't want to trade stocks that are extended too far away from the mean, however. So look for the stocks that are pointed out in the opening monologue to continue higher, like AME. You can see it just passed through the mean. A little bit of a weakness first thing, maybe an inside bar on Monday, where we trade in the upper 0.25% of Friday's price action and then follow through. As RSI indicates, we could see more upside. That's how we'd like to trade the IBD 50 this week. As we can see with CDNS, Cadence Design, and the chips semiconductor space, following through, pushing through the mean, but not too far away from it. RSI indicating we could see more upside. Look for that follow through this week. Comcast trading in the communications sector, XLC. That was a little bit weaker than the other sectors. However, we're looking for follow through. If we do see stocks like Netflix and Disney rising this week, watch Comcast. We could get a push through the mean. RSI follows through for this stock to trigger. We'd like to see a move back above the 20-period moving average, looking for a follow through and a trade of the day setup into Monday if we see strength. Rewind and check out the XRT sector cycle once again. That cycle turned last week. Could see some improvement. Look for Walmart, Target, TJ Maxx, and other stocks in this group, Dollar Tree, Dollar General, to all perform. If they're all moving together, you might have a nice setup with 5 below. Good sales and earnings, looking for a follow through above the 20-day moving average and RSI to rise through 50. We watch Genpact, symbol G, as it creates this sideways flat base, looking for a breakout on above average volume. HubSpot, looking for a follow through and a move above the 20-day. RSI to push through 50, volume to increase for a potential trade on this one as well, up to the targets 182.73 and 189.78 if we do close above the 20 period. Keysight Technologies, KEYS, was at the mean on Thursday, followed through at ATR bands. Looking for a follow through now, RSI rising through 50. We could see that break higher this week. Use your trade of the day setup and a stop inside of the opening range highs if this continues higher on Monday. Lulu in that XRT retail sector looking very good. Pushed higher on Wednesday, came back to the mean on Thursday. Buyers stepping up on Friday. This is giving you a good setup. If this does start to break higher with all those retail stocks as previously mentioned, this could be a good setup going into Monday and Tuesday. Universal Display Corp saw weakness last year after it lost the Apple contract. Since then has been in a bullish trend, followed through from January into the May peak and gave back a little bit during the consolidation period. Looking for this to follow through. It pushed through mean on Thursday at ATR bands. Looking for a follow through as RSI continues to rise. Just looking for an increase in volume. ProPetro, symbol PUMP, not quite the setup yet. It's still in a descending pattern. It needs to break back above the 20-day. We're just keeping an eye on this whole group. If Energy XLE continues to strengthen this week, look for stocks in this group to follow through as well. This is showing you what we're looking for on ProPetro. Was in a descending pattern. In this case, SS&C did move above the mean. Looking for follow through. RSI is rising. Volume is starting to increase. If that happens on both of these, look for a follow through on ProPetro, PUMP, and SS&C in the short term. Temkin, TKR, I know Mikey was looking at this one. Pushed through the mean on Tuesday, followed through, hanging out near ATR1, looking for a push higher. RSI needs to continue rising, and we need to see more volume on the breakout. Team Atlassian, a little bit extended at this point, but we're looking for a follow through, a push higher, and a breakout this week. RSI is rising, volume is beginning to increase. So if Team does break out, we're expecting to see a kind of move like we had with Trade Desk last week. Follow through Wednesday, Thursday, Friday. I'm not interested in trading Trade Desk at this point unless it just continues to push higher. I'd look for a pullback first because it is extended outside of the upper ATR bands at this point. So we have no interest in chasing it. Twitter, on the other hand, does show a lot of potential. Push through the mean on Friday. Looking for a follow through, not overbought. RSI is rising. Looking for this upper band at 39.54 and then around 40.50 to 41 if we can extend that this week. Upland and all software stocks saw a huge move to the downside last week on Monday. Looking for those to continue higher as buyers stepped up. Now we're at the upper ATR1 bands. Looking for the 50 level, ATR2 in the short term as RSI continues to rise and volume increases. Workday also pushing through the mean on Tuesday, closing above. Followed through on Friday. RSI is rising. This one's probably going to just continue. One of my favorite candidates this week, Xilinx. Looks like this is going to follow through. It's right at the mean. RSI is just about ready to pop through 50. We got the seasonality that we already discussed on XLK that picks up in a couple of weeks into the month of July. We also have semiconductors and XLK in a cycle up. These all leading to a potential break higher. You know institutions love this stock, so look for a break higher in Xilinx. Stocks from the MarketSmith Growth 250 that appear to be ready to break out. We're nearing the pivot on AZUL, a Brazil-based airline company providing passenger and cargo services in Brazil and other countries. Relative strength line is climbing. We have good sales and earnings on an annual basis. Looking for a follow through here and a breakout. Volume has been pretty conspicuous lately. As the Brazil ETF continues to break higher over the last few weeks, stocks in this ETF like Cosan, a Brazilian-based provider of raw, organic, crystal, and refined sugars, ethanol, and fuel products, just about ready to break out. Fairly inexpensive name at $13 per share. Looking for a follow-through on above average volume, as you can see. Decent earnings last time around, a beat of 67%, Annual sales and earnings climbing 2018 to 2019 significantly into 2020. Look for this one to continue to perform. Disney, as previously mentioned, one of those stocks in the XLC communications sector that should continue to see follow through. Best case scenarios would pull back a couple of days and then follow through for Disney. Netflix in the same group. Looking for it to push above the 50-period moving average now that it's tested the 200-day, back above the 20-day. Looking for a pivot breakout above 370.48 and then test the highs at 385 in the short term. Annual sales and earnings from 2017 into 2020. Look at the difference here. How can you not like this stock on any pullback? Genomics, this one's been mentioned many times before. Looking for a follow through. Bounced at the 50-period moving average after a week-long consolidation. Looking for a break above 2365, 2390, 24 in the short term. For a stock that provides laboratory testing services to pathologists, oncologists, urologists, and other hospital laboratories, look for Genomics to continue higher. Relative strength line is climbing at 98. The transports have also been performing well. This is Norfolk Southern. Some of the other stocks in the group like CSX continue to show higher highs and higher lows. Kansas City Southern, another name I think some of you have been trading lately. Looking for a follow through and a move above the 50-period moving average. And Wright Medical Group, one of the last names we're watching this week. Looking for a relative strength line to climb along with annual sales and earnings. This company develops a line of joint replacement, sports medicine, and other biological products to treat extremity joints issues for patients. Relatively inexpensive name. Looking forward to push back up to 32.69 or so in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. A watch list will be out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Get outside and enjoy your day. Spend some time with family or friends. And above all, have a great weekend. We'll talk to you soon. Take care.